perhaps the bigger trigger, but the other one, of course, is earnings as well. Let me take it across to Anisha, find out what a poll is penciling in.
Well, yes, IT bellwether TCS is going to kickstart the earnings season for Q2 FY24, but the expectations are fairly muted from the counter. We are working with the growth expectation of around 0.6% on the top line, both in terms of dollar revenue as well as the constant currency revenue as well. The rupee revenue is expected to be northwards of around 60,000 odd crores. That's where there would be a growth of around 1.3% there. Last quarter, that is in Q1, the company had taken the impact of wage hike for a large part of their employees. So on a sequential basis, there will be an improvement because in Q2, there will be productivity gains, efficiencies, as well as the lack of the wage hikes. And that's the reason Q2 is expected to see a bit of a bump up as far as margin is concerned. By 30 to 50 basis point is what we are penciling in. The profitability, however, is expected to remain flat around at 11,100 crore thereabouts. Now, in terms of the other internals, deal bookings is something which would be very good for the company. Of course, in the quarter gone by, we have heard a slew of bookings that the company has done, whether it was BSNL or the tie-up coming in for Jaguar Land Rover and the other companies as well. So, on account of that, expect the deal win momentum to be close to around $9 to $10 billion at least. And of course, the other things to watch out for will be if there's any further strategy change coming in. Headcount trend is one thing to watch out for. Over the last couple of quarters, we have seen a decline in the headcount. Whether that continues, there were reports that the company is shifting away from the hybrid model to completely from office. That is also something that the street would want more details on. Of course, the commentary in terms of how demand is panning out, is it incrementally positive or the status quo really remains? UK, America, BFSI, these are the key verticals. The updates on that will be important. And of course, the all-important buyback, which is going to be one of the big talking points this earnings season for TCS at least. The street is working with a buyback of around 18,000 to 20,000 odd crore. Premium is expected between 15 to 20% if you go by the historic averages. But of course, the acceptance ratio hasn't been that exciting for the retail shareholders. That's why we had seen tempered move after this announcement as well. But nonetheless, this is something to watch out for.
Indeed, it is. That and lots more. Let's connect with Omkar Tanksale, who's now joining in to give us his view on the entire IT sector and earnings. And let's just take forward from that point that Anisha was flagging off. An 18 to 20,000 crore rupee buyback is what the street is penciling in. What's the outlook on the overall acceptance ratio? How do you believe that the street is likely to read into the buyback announcement?
Yes, definitely. I mean, TCS is always announced in that particular range of 16,000 crores to 20,000 crores. So the major thinking of issuing the buyback or special dividend is like transferring 80% of the cash flows to the investor side. So I believe it's more of attracting the investors to the company's performance. But I also believe that the company looks to be very confident in terms of going ahead, as backed by the strong deal wins, the demand that is coming up for the generative and newer technologies like machine learning and all across sectors. Yes, definitely there are some near-term challenges which likely to persist, but I believe it's long-term good bet. I believe it's more of a positive sign in terms of TCS, so market should react positively with the price. We are expecting around 4200, which is 15% with open market. They're going to buy, but see, one should be expecting how it's going to be.
All right, that's a view coming in on the overall share buyback, but the street is also going to watch out for a number of things in terms of the strategy transition under the new CEO. What is it that you're expecting by way of the overall headline number?
A bigger disappointment because I believe TCS is more of an executioner and performs well of executioner. We are expecting around 0.7% of the CC revenue growth and 1.5% of the growth in the rupee terms. We are expecting expansion of the margins by around 80 basis points at 24%. So we are expecting, because of the easing out of the salary wage hikes and the decrease of the on-site expenses and subcontracting costs. So that will be affecting positively on the TCS margin side. But overall, the revenue growth momentum is likely to be remain tepid and not going to be a stronger in terms of getting the momentum back on the track. The recovery will still likely to be there, and it will take some more time as than expected.
Omkar, how do you see the valuations, purely the valuation call on TCS, say, compared to few others?
Yes, definitely. I mean, TCS has always been a premium. Why? Because of the three reasons that the margins are exceptionally, because it grows with the volume, the return on equity is higher as compared to other peers of Infosys, and again, I mean, the all. In terms of all perspective, it grows with the volume. If you can also see the TCS is having the highest margin, and secondly is with the Infosys, thirdly with the Tech, and fourth with the Wipro and TechM. That is the ratio. It grows with volume. So it's always having the better operating margins, return on equity, and return on capital employed. So its valuation is going to be premium. But I believe it's now it's been reduced from the upside levels, and if investor is looking from a long term perspective, then it is a safer bet to take the position along with for a longer run horizon.
Omkar, for us to say that, IT and in TCS in particular is safely out of the woods, I get some of the key monitorables are going to be very important from the management commentary and the numbers this time, right? And I'm just looking at your note itself. What they have to say about the client spend, especially in the BFSI vertical, I think that's going to be a very big signal. Pricing pressure on realizations, the rising subcontractor costs. What is your expectation at large about these monitorables and what the commentary is going to be around these?
I mean, definitely there will be a cautious commentary in terms of verticals. The waivers, I don't think. I mean, there will be a spending delays will be building on, and people started investing again back into the automation thing. I believe it's few for more quarters that one can see more of a cost optimization, and will likely to persist even for the next couple of quarters. But definitely we can see a recovery. In the last call of the management said that we have the month-on-month visibility on the sectors currently, which likely to be turning out to be positive side going ahead. H2 will be a comfortable. I mean, one can look at some part of the recovery. I'm not saying it will be a larger recovery or quicker recovery, but definitely there will be some recovery and some visibility. But definitely, I mean, one should see what is management is saying upon the client spend, especially from the North America, and that is from the BFSI vertical, because that is a major contributor to the top line.
Omkar, for joining in and sharing with us your analysis on the IT space. TCS laying low prior to its earnings, 36-37, and for the most part though, IT is holding out in the green, much like the rest of the market. We'll take a very short break and be right back.